Hubert Centers here. If you don't trade index futures, or if you don't trade futures or gaps or anything, you should always pay attention to good old-fashioned support and resistance because it is a viable technique to trade with. So here you can see we've got a little bit of resistance from yesterday. So that's the day before yesterday. That's that little mess right there. And then on this chart, we're looking at yesterday's resistance, in other words, the most recent high. And then today we opened up here right into yesterday's high, but we didn't take out yesterday's high, which is key. And then that causes a gap from yesterday's close to today's open. Now, a very high probability trade setup that happens a lot will be a half a gap fill or a full gap fill. Now, it depends on the overall market dynamics. In other words, if you've got a trending market up, then gap downs tend to feel better up. And if you have a trending down market, a gap up situation will tend to fill to the downside. So in other words, it depends on the strength of the market. So if you've got a gap up situation and it gaps up, it'll probably be a breakaway to the high side. If you get a market that's rolling over and you get a gap up, then the market tends to fill that gap a little bit more often. So just be aware of all the gaps in the markets and of good old-fashioned support and resistance, and trade around those areas. Good luck. Hope it helps. See you in the next video.